name is Greg McCoach, editor of the Mining Speculator. Thanks for coming today. We're at the end of our day. Everybody's getting tired, but it's been an exciting conference for me and for everybody, I think. 2 days. Definitely sensing the excitement about what could happen this year. I'm very bullish on mining stocks, especially exploration stocks. So my outlook, I cut this down because I figured you've already heard a lot of this already. Just quick overview, where I believe things are for 2018. I've been saying now gold and silver aren't going to move without some sort of catalyst, and that's proven true through 2017 since I've been saying that. So if we don't have a catalyst, some kind of black swan that gets safe haven buying going, I don't see we're going to have a breakout. It'll probably just grind slightly higher to, silver will follow. With a catalyst, however, and we'll talk about that a little later, if that happens, again, no one knows the future. We hope for the best. We prepare for the worst. We try to make money in it all. But with a catalyst, if a series of events or an event happens that brings a breakout, then all the better for us in the precious metals mining world. One of the things I think is going to prove true is that the duration and the magnitude of the bear market will equal the duration and magnitude of our coming bull market. I think we're already started in 2016. We got a start. We took a pause. That's normal for when the bull market gets started, but I think we're going to start gaining real momentum now. Base metals, I'm bullish on zinc and copper. I think they'll lead the way for the base metals. I do like lead also in some ways just because it's a byproduct of zinc mining. I think that lead could do well as well. Uranium is probably another year away, but I'm telling my subscribers to start building positions in uranium exploration companies. I invited Canalaska Uranium here to the show this time, and I think it's, take profits from other investments you have, start building up uranium because it's going to happen. So for now, the place to be is the quality exploration companies that deliver in the field with exploration success. Currently, I believe we are living in an unprecedented mania. A lot of people don't want to hear that. The Dow stocks, the pot stocks, the cryptos, so many things are in bubble territory, the real estate prices. And we all hope that it keeps going, and maybe it will. But I'm here to tell you that I think we're really pushing against the limits, and we're starting to see signs that things are cracking. And I think money flows could change drastically at some point. Is it this year? Is it next year? Who knows? I can't say, but it does look like we're coming to a break point on certain fronts, and we'll talk about that. I had a friend just really tough conversation. He was trying to get me interested in the cryptos, and I said, I'm really not interested at this point. But he went ahead, he mortgaged his house to raise money to put into cryptos, and I begged him not to do it, but I couldn't talk him out of it. And I hope it all works for him, but I'm really worried about it. Recently, I've been trying to tell people, I've read this book 3 times, just read it recently once again. The book by Charles Mackay, Extraordinary Popular Delusions and the Madness of Crowds. There are lines right in that book that you can just look in the media and you can see it. Like, here's what people are saying and doing. And it's right in the book, right? Proving that we are in a mania. Another thing that I would recommend everybody read, it's a very good read. It just came out. It's by Phoenix Research Capital. It's a free download right now while you can still get it. They charge for it. It's not much if you don't get the free download, but it's called The Everything Bubble, The Endgame to Central Banking. Very, very good read, and goes into this in depth. Only have 20 minutes today to talk about this stuff, so we'll just touch on things. So I believe we're in a credit-fueled delusion. And everybody wants to believe in the delusion because it's good. Everything's good, right? It feels good, right? But, we're broke, but we're full of hope many times. The governments are broke. States are broke. State of Illinois is $15 billion in unpaid bills. They have no way to pay their bills. They have $200 billion in unfunded pension fund liability. Have no way to pay it. Raise taxes on all the businesses by 35%. Governor himself said it won't do a thing to dent their debt. So what's going to happen? I believe it could be the first U.S. state bankruptcy in U.S. history. We'll see. I think hope is a wonderful thing. Well, life without hope is really dismal, but I think we get to the point where in manias we get this misplaced hope, and that's what we're, I think, going to see a change on. So where things stand, it's not a secret that central banks have been funneling liquidity both directly and indirectly into stocks. This has been happening for a long, long time, but the liquidity pump is about to end because the endless streams of liquidity, why? Because the endless streams of liquidity, which have been 100 million plus a month since 2008, have finally begun to unleash inflation. Okay, I live in Denver, Colorado, and we've been shocked at what's happened with car insurance and house insurance and grocery store bills. I mean, it's gone up dramatically in just the last year. So something's going on. I don't know if you're feeling it here in Vancouver, but many people in the States are talking about this. And look at what just happened in the bond markets, which trade based on inflation in the real world, not what you read in the news, okay? Look at this chart. For the first time in 20 years, the U.S. Treasury, 10-year Treasury bill, is now, the yield is moving up. You look at this chart for 20 years, I mean, there's something going on here, right? This is a big change. This is a big crack in the sidewalk that's telling you that something's wrong. The yield on the 10-year Treasury bond has broken its 20-year downtrend, so if the bond rates continue to rise, many countries will quickly find themselves insolvent, right? It's got to pay more interest. They can't even keep up with the interest that is now. How are they going to pay more? Globally, the world has added over 60 trillion in debt since 2007, 60 trillion, with interest rates based at close to zero or below zero. Central banks cannot and will not risk blowing up this debt bomb. So in my view, central banks will be forced to pull the plug on liquidity and let stocks go, let the stock market bubble go. The only other choice is, or number two, let the bond bubble blow up, destabilizing the entire financial system and rendering most governments insolvent. They're not going to do that. So with these two choices, they have to let stocks go. They will protect governments at all costs. Here's some 10-year real yield for German bonds. Same thing. The yield is going up. It's rising. Same thing in Japan. Not as dramatic, but starting to do the same. And here's a chart that I just saw. I had to just throw this into my slide presentation somewhere. This really tells the story. The big up and down red dotted arrows, the first one on the left is the 2000 dot-com bubble that blew up. You see where consumer confidence and savings were a big gap, okay? Then we have 2008, again, the red line showing a big gap between those two. And now look where consumer confidence and savings are, just diametrically opposed and probably getting ready for something to happen based on this chart. But we're told everything is well. Things are going great. You know, the media tells you everything's good, right? Somebody was telling me about, oh, look, car sales are booming, okay? Well, down in the United States, this is just crazy to me that this could even happen. But remember what blew us up in 2008 was the subprime mortgage meltdown, where the banks were packaging these garbage loans that were terribly rated. They were junk. They were absolute crap. And they were packaging them up and selling them to pension funds of Italy and Spain and places like this, right? You think, how could this ever happen again? Well, they're doing the same thing with auto loans now, subprime auto loans. 1 out of 5 loans in the United States is now subprime. And guess what they're doing? They're taking all those subprimes, repackaging them, giving them an A credit rating, and selling it to somebody else. Now, with all the regulatory crap we've just been through, the very people who caused the problem are doing it again, and they don't even get their hands slapped. Yet we suffer for it, right? We have to put up with all the regulatory garbage, right? So it's just crazy to me. All right, the real data is saying something very different, okay? 78% of US workers are living paycheck to paycheck. If you want to see an interesting video, a guy was on a bike down in Orange County and rode through the area along the highway where all these tent cities are up. It's unbelievable. It shocked me. I didn't realize there was this much of this. Go watch it, YouTube it, and you'll see. The credit card debt is hit an all-time record last month. All-time record for personal credit card debt, right? 49% of Canadians, you guys are doing better up here, are living paycheck to paycheck with massive debt loads as well. But the massive credit expansion has created insane wealth for the minuscule elite. Less than 0.7% now own 48% of the wealth, while the people, the masses, are strapped with massive debts and stress. 8% of the world population now owns 85% of the wealth of the world, and that is moving in the wrong direction. So debt, everybody wants to believe, oh, debt's no problem. We just keep on taking more and more debt. Eventually, those with common sense know that this has to end badly at some point. We all hope that it'll end in a controlled fashion and not a terrible fashion. But the numbers are so staggering now. They're so crazy. And I thought this little graphic really points it out how bad this particular situation is. So the majority of voters don't seem to care about federal debt. Oh, it's no problem, They keep electing the same spendthrifts into office. In the United States, George Bush, took the federal deficit from $5 trillion to $10 trillion. Barry Obama took it from $10 trillion to $20 trillion. What's Trump going to do? $20 trillion to $40 trillion? That's the trajectory we're on. Deep down, the aging masses know they need massive amounts of government debt to pay their Social Security, Medicare, and disability checks. This is why this is such a sensitive issue, right? This is really hitting home for a lot of people. We have come to a time where the debt must perpetually increase or the whole financial system will come crashing down, unfortunately. So debt at Mach 30, this is where we're at. You just have to use an analogy because we're losing track of numbers here. The federal debt has grown at such a rapid rate that standard dollar units no longer capture the truth of what's going on. The debt numbers are so large it's difficult to distinguish between hundreds of billions and tens of trillions. Taking the speed of sound as a comparison, Chuck Yeager, who was the first to break the sound barrier, did so at Mach 1, which is 767 miles per hour. The way the United States is spending money per second is $34,830 per second. That means the federal government is running up the debt at a speed that's over Mach 30. How much longer can that go on? So we need a catalyst if we're going to see gold and silver prices move up, because the central bank policy, they have to protect the dollar. It's the linchpin to the whole thing. If the dollar goes down, the whole system goes upside down. So that's why they have to manipulate against gold and silver. It's not conspiracy theory, it's just what happens, right? So, we need something to break the back of this central bank policy to allow gold and silver to reach its free market levels. Safe haven status, what is it going to be? I believe we're going to see massive new money flows. Instead of going into Dow stocks, real estate, cryptos, pot stocks, I think those bubbles are going to get popped and the money is going to come where? Undervalued assets. Is there anything out there that's undervalued more than precious metals, mining sector, mining stocks, junior mining stocks? Not that I see. Do you know of any other sector? So I think we're going to be a big recipient when people get scared, when they see that they're in trouble. What could the catalyst be? There are a lot of different things. I don't know what it's going to be, The United States, a 20 trillion current account deficit and growing rapidly. Unfunded liabilities of the United States, promises to pay exceeds 104 trillion. Never going to get paid, right? No chance that's ever going to get paid out. So promises are going to be broken. Lots of promises are going to get broken. Think of what's going to happen in Illinois, the promises that are going to be broken. I have a friend that is owed $150,000. He's an accountant that's done work for the state of Illinois, and he hasn't been paid in 2 years. They've accrued a bill $150,000. He's a small business. He's really in a bad way. And he keeps calling them, and they say, well, just keep working. We'll try to get you some money. They haven't. Pension fund unfunded liability, just in the United States, public, federal, private pension fund liability, unfunded, $4 trillion and growing. I heard another person just a month ago say it's now $7 trillion. That's really, really bad. All right, so anyway, I don't know what the black swan could be, what the catalyst could be, but it could happen this year. May not happen till next year. I don't know. But it's going to happen. It's not a matter of if. The lesson here is this. Take profits in overvalued assets, be they crypto, stocks, bonds, or property. Sell overvalued assets and buy undervalued assets. And rebalance investments, diversify into undervalued assets like gold bullion, precious metal mining shares, exploration stocks, development plays, base metals, precious metals, doesn't matter. I think all of these markets have been depressed for so long, it's only natural that they're going to be the recipient of a lot of money. So I believe we will see massive changes in money flow. Everybody's gotten used to where the money's going in real estate and cryptos and Dow stocks, but I can see we're coming to a time when this is going to change quickly, and when it does, it's going to shock people, and the money's going to come to us. And I believe we are going to experience the greatest bull market in mining shares and precious metals we have ever seen in our lifetimes, and that is my message. Thank you for listening.